Good morning, students. A very warm, or we can say a very chill good morning from my side. I am C. Ankit Sharma. Again, your income tax faculty for today's session. Today, we will complete our PGBP last session with the MCQs, with test your knowledge question and some provision. Basically, theoretical, but do not underestimate the power of theoretical provision ever. Generally in numerical subject like income tax, accounts, students consider theoretical provisions, or we can say students do not give much importance to the theoretical provision, but this behavior is very risky. So always give equal importance to theoretical as well as numerical provision in each subject. So today we will be discussing some theoretical provision regarding prescribed books of accounts under income tax. Those person required to maintain books of accounts, specified books of accounts under income tax, in which condition. Then we will have who are going to have a tax audit under section 44AB. That is also a technically theoretical provision, and section 44AD, 44AE and 44ADA, that is presumptive based taxation. That is a numerical topic. So after completing these three topics, we will move on to test your knowledge and MCQ part. So my throat infection, I am suffering from a throat infection due to this winter, etc. So a very good morning again. Namaskar, Suprabhat, Vanakkam, Sasrikal, Subha Bakhair, Kem Cho, Kasakai, etc. etc. So you might be feeling that my voice is not that energetic because there's some throat infection from last 2 or 3 days. So I am trying to come over it. So good morning to everyone. Kiran, Ramadevi, Ajay, Yuvraj, Mamta, Gaurav, Kadambari, Sangeete, Anmol, Mohammad Suhail, Neha, Arvind, Mohammad Suhail, Saifa, Virali, Mohammad Akib, Belwaz, Akram, Neha, Gopinath, Swati, Ramnivas. Very, very good to see all of you. So we will start from section 44AA, which will explain under income tax, the assessees or the person who are required to maintain specified books of accounts. But of course, before that, thought for the day. And this is today's thought for the day. And it says, the best view comes after the hardest climb. This is so true. And you can see the view. So beautiful. So if you want the best view of your life, you have to do the hardest climb of your life. And that's your profession, that's your course, that's the chartered accountancy journey, what you are doing. So this is going to be the hardest journey of your life regarding studies, of course. But I assure you that the view after that, the success you will get after becoming a chartered accountant will worth it. So it's true that the best view comes after the hardest climb. So whenever you are pursuing a difficult thing, if you are going to do a difficult work in your life, you will get the result, and that will be the best till your entire life. So let's moving on to the notes directly. This is our assignment number 4 of the PGBP, and the only time success occurs before work is in the dictionary. Because in the dictionary, success comes before what? Because S alphabet comes before the W. Otherwise, always the work comes before the success. So now, today's section 44AA, that is compulsory maintenance of accounts. Section 44AA, it will explain that under income tax, those person required to maintain specified books of accounts or not. So basically a theoretical provision, but in my opinion, equally important for your examination in your personal life also. It says maintenance of books of accounts and other documents by notified profession under section 44AA1. This section provides that every person carrying on the legal, medical, engineering, or architectural profession, or accountancy, technical consultancy, interior decoration, or any other profession, as has been notified by the CBDT in the official gazette, must statutorily maintain such books of accounts and other documents as may enable the assessing officer to compute his total income in accordance with the provision of the Income Tax Act 1961. Notified profession list has been given over here. You can see that. Rules that explain rule number 6F. It explains when a person required to maintain specified books of accounts. So let's explain this. I've already made a chart for this also that I'm going to upload. And I believe you must have downloaded all the notes, all the charts from the portal. And the chart is really going to help you in your studies. Okay. So if we say under section 44AA, person, those are required to maintain books of accounts. So under section 44AA, we can see if you are running a notified profession, it says that if you are carrying a notified profession, the notified profession list I have just shown you in the notes. If you are carrying a notified profession, then if any of these condition has been fulfilled, then you have to maintain prescribed books of accounts. And it says in case of notified profession, if it's a existing profession, if the gross receipt is exceeding 1,50,000, if the gross receipt exceeding 1,50,000 in all of three preceding previous year. Suppose if Mr. A is carrying a notified profession and for previous year 23-24, we have to find whether he is required to maintain books of account or not. So we have to see that before this previous year, for example, previous year 23-24, we have to find that is he liable to maintain books of accounts in this previous year? So we have to see in previous year 22-23, in previous year 21-22, in previous year 20-21. In all of these three preceding previous year, his gross receipt must exceeding 1,50,000 in each. In this year also more than 150, in this year also, in this year also. So if his gross receipt exceeding 1,50,000 in all of these three preceding previous year, then he is required to maintain specified books of accounts for previous year 23-24. Or if it is a newly set up business, if it's a newly set up profession, notified profession, then if gross receipt likely to exceed in previous year more than 1,50,000. Suppose now this is my first previous year. I have started my profession from previous year 23-24. So there is no preceding previous year professional existence. So this is my new professional profession and this is my first previous year. So if the gross receipt is likely to exceed, how we will find that it is likely to exceed? Suppose in its first 3 months, from April till June, my gross receipt is suppose 50,000. So that means if for 3 months is 50,000, then for the whole month we have to find it out. So technically it will be 2 lakh rupees on a proportionate basis. So we have to maintain books of accounts. I have already made a diagram for this. So that will really going to help you to understand this provision very easily. There's the diagram, just hold on. So this is the diagram regarding the maintenance of books of accounts. So books of accounts under section 44AA, the first one is regarding notified profession. First one is regarding notified profession. So the notified profession definition has been in the notes. I have just explained it to you. So if you are running a notified profession and if it is an existing profession, like say already running from some years, in case of existing business or notified profession, if gross asset exceeding 1,50,000 in all three immediately preceding previous year, then you have to maintain books of accounts in current previous year. Or if it's a newly set up profession in previous year, then his gross receipt, if likely to exceed 1,50,000 in previous year, then you have to maintain specified books of accounts. But a very important note is over here, if not fulfill any of the above condition, if you do not fulfill either condition number A or condition number B, it does not mean that you do not have to maintain books of account. It means if you are not able to fulfill condition number A or condition number B, then you are not required to maintain specified books of accounts, but you have to maintain normal books of accounts to calculate the assessee, your real income, if they need your books of accounts. So if not fulfill any of the above condition, that not required to maintain specified books of account, but has to maintain normal books of accounts. What are the specified books of accounts? We have the list of that also that we will read from the notes. So that is for notified professionals. Okay. Now second is for any business or other than notified profession. So if you are running other than notified profession or running any kind of business, and the assessee is the individual and HUF. So if you are running a notified profession, then as per case number A, you have to find out that either you need to maintain books of accounts or not. Clear? If you are not running any notified profession or running any kind of business, whether manufacturing, trading, etc., and you are an individual and HUF, then these provision will decide whether you need to maintain specified books of accounts or not. If that is an existing business or a other than notified profession. If income from this business oblique profession, that is other than notified, exceeding 2,50,000. So now in case of notified profession, the 1,50,000 was gross receipt. But in case of point number 2, if your income, that means surplus, that means profit we are talking about. So if that business earning income exceeding 2,50,000 rupees, or if the sale is exceeding 25 lakh rupees, in any of the previous year. The very important word is in any of the 3 preceding previous year. In one case, the gross receipt must exceeding 1,50,000 in all 3 preceding year. Then you need to maintain books of accounts in current previous year. But in this case, if your income from that business exceeding 2,50,000 or your sale is exceeding 25 lakh rupees, and that is in any of the 3 preceding previous year, then you have to maintain specified books of accounts. Or if it's a newly set up in previous year, then if income from this business oblique profession likely to exceed 2,50,000 or sale likely to exceed 25 lakh rupees in previous year, then you have to maintain specified books of accounts. Again, the same note, if any of the above condition does not fulfill any one of the above, then you have to maintain normal books of accounts. Next is now third case, again for any business or other than notified profession, but if assessees other than individual and HUF. So if assessees other than individual and HUF and running a business or a profession which is not notified, then in the same case, almost same condition as per point number 2, just the amount limit is going to be changed. If income from this business or profession exceeding 1,20,000 or sale exceeding 10 lakh in any of 3 preceding previous year, if it's a newly set up in previous year, then if income exceeding 1,20,000 likely, or if sale likely to exceed 10 lakh rupees in the previous year. So in these circumstances, you have to maintain specified books of accounts. There is note number 1 also, which says in case of presumptive taxation scheme that we are going to discuss after this topic under section 44 AD, AE and ADA. If you are falling under section 44 AD, AE, ADA, and you declared your income lower than the limit specified in this section, then you have to maintain books of account also. So this provision will be discussed in detail in the section 44 AD, AE and ADA. I have also written the notified profession definition over here also, so you can read from this also. I will upload this chart today. So after the class, you can find out this diagram also on the portal. This will really help you to understand the provision very easily, which is generally quite confusing. If you read from the notes, you will find it out. It's a very confusing condition, but once you will go through this diagram, and if after that you will read the provision, you will find them very easy. Moving on to the notes. So these are the conditions which we have discussed from the diagram. It has been written in the notes over here, like 1,50,000, that is for notified profession. Prescribed books of account list is this. So if you are fulfilling any condition to maintain books of accounts, these are the specified books of account you have to maintain. Next is the books of account shall be kept and maintained for a minimum of 6 years from the end of the relevant assessment year. So if you are maintaining books of account, it has to be maintained for at least 6 years, except the current assessment year. Okay. Now there is a question. Vinod is a person carrying on profession as film artist. So film artist is a notified category profession. Okay. His gross receipt from profession are as under. In financial year 2021, it's 1,15,000. 21-22, 1,80,000. 22-23, 2,10,000. So what is his obligation regarding maintenance of books of accounts? So because he is falling in point number 1 category, it says gross receipt exceeding 1,50,000 in all of the 3 preceding previous year. So in these 3 preceding year, this year 22-23, having more than 1,50,000 gross receipt. 21-20 also fulfill this condition, but 20-21 does not fulfill this condition. So out of 3 preceding previous year, only 2 preceding previous year having more than 1,50,000 gross receipt. So he do not need to maintain any specified books of account for assessment year 24-25. It is the solution. You can read it, of course. Maintenance of books of accounts for other business or other notified category. If you are an individual HUF, we have gone through with these provisions also in the diagram. If it is an existing business, income exceeding 250 or sale exceeding 25 lakh in any one of the 3 years immediately preceding. Clear? If you are newly set up, same condition. Other than individual HUF, it's 1,20,000 or 10 lakh rupees in any of the 3 conditions. This is showing lower income as compared to income computed on presumptive taxation section 44AE. AE will be discussed later, but section 44BB and 44BBB, these are at final level. Now section 44AD4, that is also going to be discussed later. So that was section 44AA, which explain us who needs to maintain books of accounts or specified books of accounts under income tax. Now section 44AB is for tax audit. It will explain that under income tax, who is required to have a tax audit on section 44AB. Before that, let me take some query if anybody is asking something. Get well soon, sir. Thank you so much. Kiran Shukla is saying, sir, please explain once again. Kiran Shukla, you can scroll back the video. We are on YouTube and you can watch that video as many times as you want. If there is any confusion in any point, that I am going to explain. Okay. Ms. Rama Devi, sir, did anyone previous year from the 3 preceding years less than 150? Yes, correct, Ms. Rama Devi. It is for notified profession only. Very good. Vaishali Bindal, I guess your confusion must also have cleared after the example we just discussed. Okay. Mr. Rama S. Good morning, sir. If notified profession or individual business in preceding previous year, if one of year not crossing 150 and income 250, then it's required to maintain books of accounts. Look, Mr. Rama S, if in case of other than notified category or in case of business, that is for individual or HUF cases. If we cross that limit of 2,50,000 income or 25 lakh of sale in any one of the preceding previous year except our current year, then you have to maintain books of account for our current year. Is there any penalty? It will depend upon AO. It can be up to 25,000, etc., but it's not exactly the same. So as per the case basis, it will be decided by the AO. Section 44AB, that is tax audit. So those who are required to conduct a tax audit under section 44AB, so we are discussing the provision, the category of those persons who required to conduct a tax audit, that is audit of accounts of certain person carrying on business or profession under section 44AB. Requirement of tax audit. It is obligatory for the person mentioned in column 2 of the table below carrying on business or profession to get his accounts audited before the specified date by a chartered accountant. This is the most important word, of course. It has to be done by a chartered accountant. So this is the table that those persons required to conduct a tax audit from a chartered accountant. So let's explain this. So section 44AB says talks about section 44B regarding the tax audit. So there are multiple conditions in which you need to tax audit your books of accounts. And what are these conditions in different scenario? Let's discuss one by one. If you are running a business, if you are running a normal business, it says condition A, if your turnover exceeding 1 crore, then you have to go for tax audit. If you are not a business which is covered under section 44A, that's called eligible business. So if you are not an eligible business, then you have to go for tax audit if your turnover exceeding 1 crore. If your cash receipt less than or equal to 5% of your turnover, and your cash payment also less than equal to 5% of your total expenditure, then up to 10 crore turnover, no tax audit. That means tax audit will be in this situation if your turnover exceeding 10 crore. So for normal business, those are not covered under section 44AD. What is section 44AD businesses? That is called eligible business. For those businesses, the tax audit concept is different. So we are talking about normal business. Those are not covered under section 44AD. Normal, that is not covered under section 44AD. So you will able to understand the nature of business. Those are not covered under section 44AD when we will discuss section 44AD separately. So after this tax audit section, we will have our section 44AD, 44AE, 44ADA. So what are those businesses that will going to be discussed in those sections? For the time being, you can understand that if your business does not cover under section 44AD, that you are not eligible as a business under section 44AD, then your tax audit will be done under two conditions. First, if you turnover exceeding 1 CR, you have to go for tax audit. But if you fulfill these two conditions, that your cash receipt is less than 5% of your total receipt or up to 5%, and your cash payments are up to 5% of your total expenditure, then you need to do your tax audit only if your turnover exceeding 10 CR, not 1 CR. So technically we can say that if your cash receipt exceeding 5% or your cash payment exceeding 5%, then you have to go for tax audit if your turnover exceeding 1 CR. But if your cash receipt is less than 5% and both conditions should be satisfied, your cash payment is also less than 5%, then you have to go for tax audit only if your turnover exceeding 10 CR. That is for normal business. Now, what if your business falls under section 44AD? So that is called eligible business. So if you are falling under section 44AD, then when you need to tax audit, if your turnover exceeding 2 CR. So if your turnover exceeding 2 crore, then you have to go for tax audit. Again, it is just like this condition. For other business, it's 1 crore. For 44AD is 2 crore. So for other business, there is a B condition also. So for 44AD also, we have a B condition. Like almost same like this. It says, if your your cash receipt is less than up to 5% of your total turnover. If your cash receipt is less than up to 5% of your total turnover and plus your cash receipt up to turnover, like there it was 10 CR, it is here up to 3 CR. So if your turnover exceeding 2 CR, you have to go for tax audit. First condition. Even if your turnover is up to 3 CR, but if your cash receipt is less than or up to 5% of total turnover, then there is no tax audit, provided there is one more condition need to be satisfied, that you declared your income up to a specified limit of 6% oblique 8% as under section 44 AD. So if your cash receipt is less than 5% of total turnover and your turnover is up to 3 CR, not exceeding 3 CR, and you declared your income up to the specified limit of 6% and 8%. What is this 6% and 8%? That is also we are going to discuss in section 44 AD provision. So if these three conditions fulfill, receipt is less than up to 5% cash receipt, total turnover is up to 3 crore, and income has been declared up to the specified limit, then you need not to go for tax audit. Then when you are going to tax audit, if your turnover exceeding 3 crore, tax audit. Of course, if your turnover exceeding 2 crore and your cash receipt is more than 5%, then again you have to go for tax audit, even if the turnover is up to 3 crore. And D condition, if turnover up to 2 CR, and same this condition, income is lower than specified percentage, then you have to go for tax audit. So there are multiple cases under section 44 AD for which you need to go to tax audit. The percentage condition like 6%, 8%, you will able to understand when we will complete our section 44 AD provision. Okay. So for section 44, we have understood that in case of normal business, the tax rate provision. For eligible business, under section 44 AD, we can explain in the other way also. If 44 AD apply, if less than up to 2 CR, and if net profit is 6%, less than 6%, or 8% of turnover, plus cash receipt less than equal to 5% of total turnover, and turnover less than equal to 3 crore. So in this condition, you not need to go for tax audit. If up to 2 crore and net profit is less than 6% or 8%, you have to go for tax audit. If it is more than 2 crore, then always tax audit. So there are multiple conditions for these conditions. Now there's section 4484 also, which says once you get into the tax audit provision, or once you fall under section 4480, you cannot apply the other provisions. You have to follow that provision for next 5 years. So it's better to understand this provision after section 4480 AE and AF. So this is the diagram which has been made by in the study material, which has been in the study material. This is beautifully drafted. So in case of person carrying on normal business, if his total sale or turnover or gross asset in business exceeding 1 CR in the relevant previous year, clear? It will applicable only if that business does not fall under section 44AD cases. In case of such person, that means normal business, we have seen that if total aggregate cash receipt is up to 5% of total turnover and the same expenses up to 5%, then the limit will increase to 10 crore. Up to 10 crore, there is no requirement to tax audit. In case of section 44AE, again the section 44AE, that is a presumptive based taxation that is going to be discussed later after this section. And in the section 44AE, it has been declared that if you does not have more than 10 vehicles during the previous year, and if you are declaring your income up to a certain level, you need not to conduct a tax audit. But if you declare your profit lower than as specified in section 44AE, then you have to go for a tax audit. This is our eligible business, section 44AD. And it says you need not to conduct a tax audit if your turnover is up to 2 crore and you are declaring your profit as specified under section 44AD. If turnover exceeding 2 CR, then you have to go for tax audit only if your cash receipt is exceeding 5%. This is the new provision that if your cash receipt is up to 5% and turnover is up to 300 lakh, you need not to go for a tax audit. In case of profession, if you are conducting a profession, that is a notified profession, if your gross receipt in profession exceeding 50 lakh rupees in previous year. So in case of profession, if your gross receipt exceeding 50 lakh, you have to go for tax audit. But if you are running a notified profession, in the point number B, in that situation, you have to go for audit if your turnover exceeding 50 lakh, or even if turnover is less than 50 lakh, you have to go for tax audit if you declared your income less than 50% of your gross receipt. All these percentage, 50%, 8%, etc. These are technically in presumptive based taxation scheme. So when we will discuss the provision regarding section 44AD, 44AE, 44ADA, in that case, it will be easy to understand these provisions. So from my advice, when we will discuss section 44AD, ADA and AE, after that, if you read this provision of section 44AB, that will really help you to understand this provision easily. Here's an amendment again in this notified profession case also, that even if your receipt exceeding, in case of notified profession or in case of profession, we can see for notified profession, for other profession. For other profession, there is a single provision. If your gross receipt exceeding 50 lakh, you have to maintain books of accounts and you have to go for tax audit. For notified profession, if up to 50 lakh and income declared less than 50% of your gross receipt, you have to go for tax audit. And there's amendment again, as in all cases, even if your income up to 75 lakh and cash receipt is less than up to 5%, then no tax audit if profit declared more than equal to 50% of gross receipt. So this extra provision regarding the cash receipt basis has been made in all section 44AD and section 44ADA. Audit report, audit account, specified date, you have to read it. The specified books of accounts maintained date is 31st October is the written filing date, and the tax audit date is 30th September of the relevant assessment year. Penalty for failure to get books of accounts audited. If any person fails to get his accounts audited in respect of any previous year or furnish the audit report by the specified date, the penalty is 1/2% of the sale. That means 0.5% of the turnover or 1,50,000 rupees, whichever is lower. So the penalty will be 1/2% of turnover or 1,50,000 rupees, whichever is lower, that is you have to pay. This is section 44AD, 44ADA, 44AE. So when we were discussing the provision regarding tax audit, that might confusing you because of this percentage of 6%, 8%, 50%. What is section 44AD? What is section 44ADA? What is section 44A? So once we will discuss these provision over here in detail, so that will really going to help you to understand automatically section 44AB provision, right? So we are discussing section 44AD, ADA and AE. So section 44AD, AE and ADA having a common characteristics that in these specified businesses or profession, the income tax has made prescribed provision that you may pay a certain percentage of your receipt, etc., as a profit, and we will charge income tax on that specified percentage. And you need not to maintain a specified books of accounts. You need not to conduct a tax audit if the certain condition has been satisfied. So section 44AD is applicable for businesses turnover up to 2 crore rupees. If your turnover is up to 2 crore rupees, that limit has been increased now 3 crore also. But if your cash receipt is not more than or up to 5%. So we can see that this is turnover up to. So if your turnover is up to 2 CR and you are ready to pay 8% of your gross turnover receipt or 6% of your digital receipt as the income on this business, then you need not to maintain specified books of accounts or conduct tax audit. The new concept has been added. If turnover is up to 3 crore and your cash receipt is up to 5% of total turnover, even in that case, if you're ready to pay 8% of your cash receipt and 6% of your digital receipt as your income, if you want to declare it, then you need not to maintain books of accounts, need not to conduct a tax audit. So technically, section 44AD is applicable, and it says it will be applicable in two conditions. If your turnover up to 2 CR, in that case, how much is your cash asset? 5%, 10% does not matter. You just need to declare your income. 8% of your cash receipt and 6% of whatever your digital receipt as your income. You declare this as your income, and then you need not to maintain your books of accounts specified or need not to conduct tax audit. If turnover is up to 3 crore, then again, if you declare 8% of your cash receipt or 6% of your digital, then again you need not to maintain books of account and tax audit. But one more condition should be satisfied, that your cash receipt should be not more than 5% of total turnover. So technically we can say under section 44AD, if turnover exceeding 3 crore, then always required to maintain books of accounts as well as tax audit. And if turnover is up to 3 crore, then we have two conditions. If it is up to 2 crore, then whatever is your cash receipt percentage does not matter. Just declare 8%, 6%, it's over. And if it is more than 2 crore, but up to 3 crore, in that case also you can pay 8% or 6%, but in that scenario, your cash receipt should not exceed 5%. So who are eligible for this businesses? Let's see. So I've made a summary. So after this summary, definitely it will really help you to understand section 44AD and as well as section 44AB. SSC, those can be eligible to avail this section 44AD provision upon their business. That is applicable to only individual, HUF and partnership firm. So if you are running a business under LLP, as a company, etc., so you cannot claim section 44AD benefit. So that was normal business what we were discussing. What is normal business? If you are a LLP company, etc., because on that persons, this is not applicable. It has been written not applicable to LLP company, etc. So for those businesses, if turnover exceeding 1 CR, you have to go for tax audit. If turnover is up to 10 CR and your cash receipt and cash payment is up to 5% of total respective receipts and payment, then you have to go for tax audit. So for individual, HUF and partnership firm, section 44AD is applicable. Not applicable, person availing deduction under section 10AA, 80IA, 80IC, etc. Those also cannot avail. So even if an individual availing deduction under section 10AA, then individual fulfill point number 1, but because he does not fulfill point number 3, so even he cannot claim section 44AD advantage. Not applicable for business having gross asset more than 2 lakh and having more than 5% receipt in cash. Any business whose total turnover receipt in previous year less than up to 3 crore or 300 lakh in the relevant previous year. If aggregate cash receipt in the relevant previous year is up to 5% of total turnover or gross receipt. So now you will see, then when we will discuss section 44AD, you will automatically understand the provision of section 44AB. For example, now after this example, you will see the concept will be clear for section 44AD as well as 44AB. Point number 8 says, if turnover exceeding 200 lakh and cash receipt exceeding 5% of total cash receipt, then you have to go for tax audit always. If turnover exceeding 200 lakh and cash receipt is more than 5%, then tax audit will have to conduct. If turnover exceeding 300 lakh, 3 crore, always tax audit. If turnover up to 200 lakh, then no tax audit if we are declaring profit up to 6% or 8%. If we declaring profit less than 6% or 8%, then we have to go for tax audit. If turnover exceeding 200 lakh but up to 300 lakh, cash receipt is up to 5%. Again, this is the new amendment, which what we were discussing in section 44AB. No tax audit if we declare profit up to 6% or 8% as the provision required. So in point number C and D, there is no tax audit required. But if in point number C or D, we declare our profit less than 6% or 8%, then we have to maintain books of account as well as we have to conduct the tax audit also. So now if you understand the concept of point number A, B, and C and D, and after that, if I'll ask you, when under section 44AD, tax audit needs to be done, then we have 3 conditions, or we can say 4 conditions. If turnover exceeding 200 lakh and receipt is more than 5%, then does not matter, always audit. If turnover exceeding 3 CR, always audit. If turnover up to 200 lakh and you are declaring profit up to 6 or 8% or higher, then no tax audit, otherwise tax audit. If turnover up to 300 lakh, cash receipt less than equal to 5%, no audit. But if declared percentage up to 6% or 8%, again in D case also, if you declare your percentage less than 6 or 8, you have to go for books of accounts and tax audit. Non-applicability of this section for person under section 44AA is specified profession, because for a specified professional we have section 44ADA. Not applicable for commission or brokerage business, not applicable for agency business, not applicable for section 44AE. Now point number C, declare this. PGBP, that means if you falling under section 44AD, if you are fulfilling condition of section 44AD, you are an eligible business, then you have to declare your profit at least 6% of the gross receipt paid or payable in digital mode, that is banking, IMPS, etc. And 8% of gross receipt paid or payable to the assessee in the previous year other than above mode, or a sum declared in ROI, whichever is higher. So if you are falling under 44AD provision, if you are an eligible business, that means your turnover is up to 200 lakh. If it is under 300 lakh, then receipt is less than 5%. If you are an individual, HUF and partnership firm, not claiming deduction under section 10AA, etc., not in commission business, not in agency business. So these are conditions if you have fulfilled. Then if you are declaring your profit up to 6% or 8%, then you need not to conduct your tax audit or need not to maintain specified books of accounts. So this 6% and 8% will be your net profit directly. We do not have to solve this provision by adding net profit plus allowed expenditure, disallowed expenditure. No. If the question relates to section 44AD, whatever is your gross receipt, you have to add 6% or 8%. That will be your answer. You need not to allow any deduction. You need not to disallow any deduction, including interest and remuneration to partners in case of partnership firm. Suppose your turnover is section 44AD is 150 lakh. It's a partnership firm and the salary to partner is 2 lakh. Depreciation as per income tax is 1 lakh. All is irrelevant. If they ask your net profit as per section 44AD, so if this 150 lakh, out of this 150 lakh, 100 lakh is cash receipt, 50 lakh is digital mode. Then for 100 lakh, you will take 8%, And for 50 lakh, we will take 6%. So that means 8 plus 3. 11 lakh will be my answer. It is this simple. So technically, if in the question the turnover has been given, that will be given, of course, and the bifurcation in digital mode and the cash mode also will be provided. So if it is a question which fulfill the condition of section 44AD, then we need to find out the net profit in just applying these percentage. Now section 44 AE. 44 AE is applicable for transporter not own more than 10 vehicles at any time during previous year. So let me take some queries before that. Prasad is asking, other than RTP and previous year question, from where we can practice? You can solve the illustration of study material, the test your knowledge question, the RTP, the last previous year examination question, of course, at least 4 attempt questions. And there is also mock test papers on the portal. You can also go for that questions, and that will be enough. You need not to do anything else. The institute has been framed questions wonderfully in the study material, RTP, mock test paper, and of course the previous year examination questions is utmost important to solve. If you are able to crack those questions, that means you are prepared for your examination. Okay. Dhruv Khattar is saying, please explain in Hindi, sir. Dhruv, I can explain in Hindi if there's any query regarding the provision. We cannot explain the provision in Hindi as it is not technically possible to explain the provision in Hindi as well as English. If there's any query regarding any provision, any particular point, I will explain that in Hindi. Next is Srinivasan is saying, sir, PGBP to MCQ not uploaded. I have uploaded that, Srinivasan, yesterday night. So it might take some time to show on the portal. You will able to find them after some time today, I guess. Okay. Mr. Rohit Gupta, in rule number 6 in the prescribed books of account, I did not get the point number 5 in the list of prescribed document. I've explained it. Don't not worry, Mr. Rohit. Mr. Prince, what's the difference between gross asset and revenue? That is same. There's no difference between gross asset, sales, or revenue, or receipt. They all are same. Next is Mr. Varun is saying 5% of 10 CR or 1 CR. No, 5% of 10 CR is, no, I'm not asking. I'm saying whatever is your turnover. If your turnover, suppose up to 10 CR, this benefit can be obtained. So if your turnover is suppose 6 crore, then 5% of 6 CR, that means 30 lakh. So your cash receipt should not exceed 30 lakh. Suppose expenditure is 4 crore. So now 5% of 4 crore, that means 20 lakhs. So your cash payment should not exceed 20 lakh. So whatever the turnover will be given in the question, we have to see the 5% of that given turnover. And if turnover exceeding 10 CR, then automatically it should go for tax audit. So up to 10 CR, this is applicable, but the 5% will be applicable on the amount of turnover that will be given in the question. What do cash receipt and cash payment mean for the purpose of section 44 AB, which do not fall under digital mode definition, will be cash receipt. Okay. Next is सर नॉर्मल बिजनेस में 44 AB सेकंड कंडीशन में लेस कैश 5% ऑफ रिसिप्ट में एनी लिमिट? Yes, of course, up to 10 CR. Who was asking this? Vaishali. If the receipt is more than 10 CR, then you have to go for tax audit. If the receipt is less than 10 CR, then only this 5% condition will be applicable on that receipt part. Srinivasan asking 6 or 8% of what? You might ask this question when we were discussing section 44AB. Now, when we discuss section 44AD, you might get your answer. Whatever is your receipt, 6% or 8% of your receipt. If your turnover is 150 lakh, then we are talking about 6% of your digital mode receipt and 8% of your other than digital mode receipt. Please clarify the remuneration to partners again, Mr. Gaurav. We have discussed the provision regarding partners remuneration, section 40B. But for section 44AD, the clarification regarding partners remuneration is like this. Suppose there is a partnership firm. Here is a P&L has been given in the question. Suppose sale is 150 lakh. Purchase is 100 lakh. Salary to staff is 10 lakh. Salary to partner A and B 2 lakh each. Interest to partner A and B 20%, 30%. Suppose 1 lakh, 1 lakh. Provisions has been made for 3 lakh. Depreciation as per accounts, suppose 20 lakh. So now we are having a net profit 110, almost 11 lakh. Now suppose the question says that this business fulfill all conditions of section 44AD. So calculate net profit as per section 44AD. If the question asks this. If it does not given that how much is your cash receipt or how much is digital, then you can assume that it is 100% cash or 100% digital. But there will be information in the question. Suppose the question says that digital mode receipt was 90 lakh and cash was 60 lakh. That will be given in question. And now the question asks you to calculate the net profit as per section 44AD. So because if we are going to solve this question as per normal provision of PGBP, not as per section 44AD, then what we need to do? We have to take this net profit of 11 lakh. We have to disallow this whole salary of partners. We have to disallow exceeding 12%. That means 8% of interest of Mr. A and 18% of disallowed interest of Mr. B. Provision disallowed, that means 20 lakh need to be added back. Depreciation as per accounting needs to add back. Provision was 3 lakh. Depreciation was 20. Suppose depreciation as per income tax has been given in question 25 lakh. So we need to deduct it. Then we will find our book profit once. Then after that we have to find the remuneration. Then we have to deduct it as per section 40B, partnership firm assignment. But if we need to calculate the profit as per section 44AD, we need not to do anything like this. Nothing. Not required. We just need to take 8% of cash receipt. That will be 4,80,000. And 6% of this. That is 5,60,000. We need not to do anything else. We need not to do anything with the depreciation, with the provision, with the remuneration of partner. Does not matter. This will be your answer. I hope it's clear. Mr. Nagaraj, no deduction allowed to section 30 to 38 for 44AD except partner remuneration and interest. No. Yes. Technically, for section, we have only deduction applicable. There is no deduction for section 44AD. There is no deduction of partners remuneration under section 44ADA also. We are going to discuss point number E of section 44ADA explains there will be no deductions of partners remuneration for 44 ADA also. Only under section 44 AE, only 44 AE, you are allowed to take the partner simulation deductions. Okay, not in section 44 AD and ADA. Next is Jay Patel. Sir, I am confused with the limit of tax audit of 1 CR and 2 CR. Please clarify that. Okay, Mr. Jay and all other students, let me complete section 44 AD, 44 AE and 44 ADA. After that, I will again resume section 44 AB provision. And let me tell you, that will be really easy at that time, because we are able to understand what is 6%, what is 50%, what is eligible business. Because we discussed the section 44 AB before these presumptive taxation businesses, which is actually explained in section 44 AB. So there might be some confusion. So let me complete section 44 AE and ADA. Then we will resume again section 44 AB. That is a minimum, Mr. Praneeth Kumar, minimum time period to be kept the books of accounts for 6 previous year, minimum. That is not a maximum. But if your case has been opened section 147, there is separate provision regarding that. You have that much information that the assessing officer can calculate your income under section 147. But this is not our syllabus part, so I can skip it. Okay. So that was section 44AD. Now we are moving on to section 44A. 44A says, if you are running a business, transport not more than 10 vehicles at any time. So if you are in a transport business, running them or applying and hiring, in that case, if you own not more than 10 motor vehicles during previous year, at any time, that means even for one single day, if you are having more than 10 motor vehicle, then you cannot apply section 44A provision. So the first condition of section 44A says, if you are in a transport business and you do not have owned more than 10 motor vehicles at any time during the previous year, you can apply the provision. The provision says, as under section 44AD, if you fulfill certain condition like your individual HUF, etc., commission business not running, agency business not running, your turnover is up to 2 lakh or up to 3 lakh, you can have the benefit of 6% and 8%. In the same way, if you do not have more than 10 motor vehicle at any time, then you can take the benefit of section 44A provision. It says your motor vehicle will be divided into 2 categories. One will be heavy motor vehicle, those having capacity of more than 12,000 kg. Other will be treated as light motor vehicle or medium motor vehicle. So for these motor vehicle, we have decided 7,500 rupees per month will be treated as income. Fixed 7,500 rupees per month or part of the month. That means if you use that or not, if you owned that vehicle for 6 months and 3 days, we will consider 7 months. If it is 6 months or 10 days, we will consider it 7 months. So 7,500 rupees per month or part of the month will be your income owned by SSC. The very important word is owned by SSC. So whether you are using that vehicle or not, it does not matter. If you own that vehicle, 7,500 rupees per month will be treated as your income or profit. If you are using heavy motor vehicle, you own that. In that situation, 1,000 rupees per month per vehicle or part of the month for per 1,000 capacity will be considered as your income owned by SSC. The aggregate of these income will be your income for the previous year. If you want to pay tax under section 44A, here is theoretical provision. Income per vehicle is amendment, medium, light motor vehicle, 7,500 rupees per month or part of the month owned by assessee. Used is irrelevant. In the case of heavy goods vehicle, that means more than 12 metric ton gross vehicle weight. The income would be deemed to be an amount equal to 1,000 per ton of gross vehicle weight per month for each goods vehicle. In case of partnership firm, interest paid to partner is deductible subject to the condition and limits specified in section 40B. That you can also find from this table. This is the table for the case of 44AD, AE and AF. So in case of 44AD, you cannot claim interest or salary. Even in case of firms, salary interest cannot be claimed under section 44ADA and 44AE. In case of salary and interest paid to partner is deductible. So only under section 44AE, the interest and the salary paid to the partner is allowable. Interest and salary paid to partner is deductible. Not under section 44AD, not under section 44ADA. We will solve the question regarding this also. Illustration number 2. We have illustration also. Now section 44ADA is for notified category of business. It says 44ADA inserted to provide for estimating the income of an assessee, those falling under notified category. Total gross receipt should not exceed 50 lakh. Total gross receipt if exceeding 50 lakh, that is up to 75 lakh. Then your cash receipt up to should be 5%. The percentage is fixed. 50% of your total receipt will be treated as your profit. If you want to declare your profit less than 50%, in that case, you have to go for a tax audit. No deduction will be allowed, not even interest and remuneration to partners. 44ADA not applicable if your gross receipt in case of notified profession category exceeding 75 lakh. Presumptive taxation scheme applicable only for 44AD concept is over here. If you declared your profit in any previous year as per section 44AD, then you have to declare your profit for next 5 years also as per section 44AD scheme. But if you discontinue this scheme in any previous year, in consecutive 5 assessment year, if you discontinue this scheme in any of the year and you go for the normal scheme provision, then for that year and for next 5 years, you cannot apply section 44AD again. For example, if assessee in previous year 22-23 apply section 44AD, if he pays tax as per section 44AD, then for next 5 previous year, that means 23-24, 24-25, 25-26, 26-27, 27-28, he has to pay tax as per section 44AD provision. But suppose he default in this year 25-26, he defaulted, he paid tax as per normal provision. So if you discontinue this time duration, then this is called the default year. So in the default year, that means you pay tax and you came out of section 44AD. Then for next 5 years from this default year, you cannot go again as per section 44AD provision. So that means from 26-27, 27-28, 28-29, 29-30 and 30-31. So for these 5 years, there will be lock-in for you to apply 44AD. So this 44AD will be restricted for you for next 5 consecutive years after the default year. That's a theoretical provision. So this is the format, we can say the tablet format in which the section 44 AD, ADA and AE has been explained. What we have explained over here in a summary form, this has been explained in this table form. So you can read the provision. Almost all provisions are same. There is no difference. It's just the formatting. And this is the table I have copied from the study material. It has been explained very easily. There is a problem in the study material. You can see if you'll find in the study material, the limit will be over here 50 lakh rupees. In the second point, in this specified profession under section 44AA1, there will be written whose gross receipt is less than equal to 50 lakh. But it is wrongly printed, so that will be 75 lakh. So if any one of you going to read it and there is 50 lakh, kindly change it into 75 lakh. I have changed it in my notes. So if in a study material, if you are reading from it, so kindly change that is 75 lakhs. You might not get confused. So these are all the provision what we discussed in the summary format. So after this section 44 AD, AE and ADA, the definition of heavy goods vehicle, gross vehicle, unladen weight, etc. There's a question. Now let's solve this question. Then we will again resume section 44 AB. Let us consider the following particulars relating to a resident individual, Mr. A. Being an eligible assessee, carrying on retail trade business, whose total turnover do not exceed 2 crore in any of the previous year relevant to assessment year 2, assessment year 26-27. So we have been given the turnover limit, clear? And the question is asking in the above case, okay, we just need to find out whether he can declare his profit as per section 44 AD or not. So total turnover in case number 1 is 24-25. It's less than 2 crore. If it is more than 2 crore, then we have to find that up to 3 crore, the cash receipt must be less than 5%. So that is not the case because turnover not exceeding 2 crore. Out of this 1 crore 80 lakh, 1 crore 60 lakh has been received in electronic mode. That means digital mode. So we can declare our profit on this 1 crore 60 lakh, 6%. And the balance 20 lakh, that means 8%. Income offered by him is exactly the same, 6% on 1 crore 60 lakh and 8% on 20 lakh. So can we apply section 44 AD over here? The answer is yes, because your income is less than 2 crore. You are declaring your profit as per the prescribed limit that has been prescribed in section 44 AD. If he is going to declare his profit less than 6% or 8%, then he have to go for tax audit, even if the turnover is less than 1 crore also. The second scenario, again turnover is 190, 145, 1230. It says we have paid 6% on 1.45 and 8% on 45. So can we offer 44 AD provision? The answer is yes. Now third case, turnover is 2 crore. 180 is your digital mode, 10 lakh is your non-digital mode. Sorry, 10 lakh, balance 20 lakh is non-digital mode. Income offered 10 lakh. How? 5% on 2 crore. So that is wrong. You have to declare at least 6% on 1,80,000 and 8% on 20 lakh. Then you can apply 44 AD provision because you have declared income lower than the specified limit. So you cannot apply 44 AD provision. So now you have to go for a tax audit, and specified books of account should also be maintained. This is the solution. And because in this year 26-27, he came out of section 44 AD. So this is now default year. And after this 26-27, for next 5 years, he cannot fall under 44 AD scheme. Where it has been explained that from 26-27, next 5 years, you cannot go for this scheme. 27, 28, 29, 30 and 31. Mr. Praveen engaged in retail trade reports a turnover of 2 crore 98 lakh 50,000. Amount of cash received this one and balance through prescribed electronic mode on or before 31st October. His income from the said business as per books of account is 15 lakh. Compute as per the provision of so and so. Suppose this is his first year of business. So is Mr. Praveen also eligible for presumptive tax determination of his income chargeable to tax for the assessment year? The provision says yes. Now you can see the turnover exceeding 2 crore and the amount received in cash in previous year 23-24 is only 14 lakh. So 14 lakh percentage we have to find out, is it exceeding 5% or not? Because up to 3 crore you can take the benefit of 4480. If your 5% cash receipt is up to only 5% of your turnover. So 14 lakh divided by 2 crore 98 lakh and 50,000, that is 4.69%. So our cash receipt out of our turnover is only 4.69%. So that means less than 5%. So he can take the benefit of section 44AD. What he needs to do? Up to 14 lakh, he can pay profit declaring 8%. And the balance, he needs to declare his profit up to 6%. So if he is ready to do that, in that scenario, 44AD provision is applicable. You can see the solution. So is Mr. Praveen also eligible for presumptive taxation? The answer is correct. Yes. Determine his income. So he has to pay 8% on 14 lakh and 6% on balance value. You can read the solution of theoretical provision also over here. This is our 44AE question. 44AE regarding the question also. Just a second. Transport business question. Okay. So the question says, Mr. X commenced the business of operating goods vehicle on 1/4/23. He purchased the following vehicles during previous year 23-24. Compute his income. So total number of vehicles, first of all, you have to check 2, 3, 6, 7, 8, 9, and 10. So it's not more than 10. So he can apply section 44AE provision. One by one, we can calculate the income. So gross vehicle weight is 7,000 kilogram. That means it will fall under medium or light motor vehicle category. We have two numbers of vehicles. So that means 7,500 rupees per month for two motor vehicles. How much month we should consider? Date of purchase was 10th April 2023. So from the amount says 7,500 rupees per month or part of the month. So we will consider from April also till next March. That means 12. That is the income from this vehicle. Then 6,500, it is again light motor vehicle. So 7,500 rupees. One number of vehicle. It has been purchased in the March 2024. That means only for 1 month. It is for owned by SSE. So we will take only 7,500. Next is 10,000 kilogram. That will again fall under 7,500 rupees. 3 motor vehicle. Date of purchase July 16. We will consider July also. That will be July, August, September, October, November, December, January, February, March. That means 9 months. This is going to be income from these vehicles. 11,000 again 7,500 into 1 in January, February, March. 3 months income. Now in case of 15,000, that is heavy motor vehicle. These both are heavy motor vehicle. In case of heavy motor vehicle, the provision says 1,000 per ton capacity. 15,000 means 15 tons. So that will be 1,000 for each ton. So it will be 15 multiplied into 1,000. 2 motor vehicle. And the August is the date of purchase. So August, September, October, November, December, January, February, March. That means 8 months income. This is again 15,000, 1,000 for each tonnage capacity. So that will be again 1,000 into 15 tonnage capacity, 15,000. One motor vehicle, and it's in February. That means February and March. So total of these all category will be my total income under section 44AE. The additional information says what would your answer change if the goods vehicle purchased in April 2023, that means this one, were put to use in July 23. Put to use does not have any effect, even if does not used for even a single day. We have to consider the income. Why? Because the amount based upon ownership, not the put to use. So if it is owned, the meter of 7,500 or 1,000 per tonnage capacity will start. It is irrelevant. The day of use, the put to use, all are irrelevant. The answer will remain the same. There's a solution you can see. Computation of business income in cases where income is partially agricultural and partially business in nature. So in the, I guess, last year, like previous year, 20 to 23, last study material, it was a part of chapter number 3. That was at that time in the basic module, income which do not taxable income, that is exempted income. So now this is incorporated in PGBP provision. It's a very simple topic. After this topic, we will discuss section 44AB tax rate provision once again. And then we will move on to our test your knowledge question part. So computation of business income in cases where income is partially agricultural and partially business in nature. So that is called composite business. That is mixed. If your business is 100% agricultural business, that is not going to be taxable at all. That is exempted income. But if your income, if your business falls under agricultural and non-agricultural activities, then in that situation, we have to calculate income separately for agricultural part and non-agricultural part. The provision says if you are running a rubber business, that you are plants rubber tree and you are getting natural rubber, and after that you are processing that and manufacture some item. For in that scenario, if you are in the rubber business, the income which has been earned by you from that composite business, out of that 35% profit of that business will be non-agricultural. That means taxable. 65% will be your agricultural income, that is going to be exempted. If you're running a coffee beans business, 25% will be your non-agricultural, taxable, 75% will be agricultural, exempted. If that is a roasted coffee or tea, then the percentage is 60 and 40. Always higher percentage is exempted income, lower percentage is taxable income. It is this simple. It has been written in a table form also. That is 35, 65, 25, 75, 40, and 40. This is a question regarding this also, like income from sale of centrifuge latex processed from rubber plants growing in Darjeeling. So that is 100% agriculture is going to be fully exempted. Income from sale of coffee grown and cured in Yarkout, Tamil Nadu, exempted or taxable, or applying the percentage. Income from sale of coffee grown, cured, roasted and grounded in Colombo. Colombo is outside India. So agriculture income only can be those income which has been in India. So that is going to be full taxable. 2,50,000 will be your non-agricultural income. Income from sale of tea groans and manufacture in Shimla. That is a percentage of 60-40 is going to be applicable. Nursery income is going to be exempted completely. So you can see in this case of sale of latex, that is 35% will be your business income and balance will be your agricultural. Coffee grown, that is 25% and 75%. Colombo is going to be full taxable. The tea will be 40 and 60. Sapling CD 100% exempted, not going to be taxable. So that was the provision till now regarding the PGBP. We are going to resume with section 44AB once again. And now you will see how easy it will be, because we have gone through the provision of section 44 AD, 44 ADA, and 44 AE. As I always says, revise twice. That's my advice to make you wise. So we have left with section 44 AB and test your knowledge question. Before going for the break, let's discuss the provision of section 44 AB once again. Then we will go for a break, and after that, kindly have a pen, paper, a calculator. So we will go for test your knowledge questions and MCQs also. This is our last session for PGBP, but I will resume day after tomorrow with capital gain chapter also. So if you have any problem in PGBP, excuse me, as I told you, I'm not well. So if you have any problem in PGBP provision, you can ask me in the next session also. We are together for next 6 sessions, 5 for capital gain and 1 for income from other sources. This is our section 44 AB. We will discuss it. Let me take some query first. The gross receipt is on accrual basis or cash basis? Rohit Gupta, good question. It depends upon nature of business. If your business is following the cash system of accounting, then the cash receipt will be considered as a gross receipt. If your business is applying mercantile system of accounting, then we will take your accrual based receipt for your gross receipt. It depends upon the nature of business and the method of accounting used regularly by the business. Sir, what if any one of that consecutive year he did not met 44 AD criteria, so he filed normal return, can he is eligible to avail 44 AD again? So Soumya, I guess now this confusion has been cleared because we have just explained the provision regarding it. You might ask this question during that topic, what we were discussing. But as we have discussed the example also, as we have explained the provision also, so you might get your answer. Miss Tantiga, in exam, how to write answers, sir, with the help of a pen, of course. Whatever given book as well as write or not, sir. You have to learn provision strongly, of course, and you have to write the provision as per described in your books, etc. And the BOS will give the knowledge regarding this, so you kindly can send a mail to the BOS. They will definitely going to guide you regarding this. Okay, so now section 44 AB, and I'm sure at the time when we were discussing section 44 AB, it might get confusing that what is this conditions are. But as we have completed now 44 AD, AE, and ADA, now you will see, you will understand the provision so easy. So in case of a person carrying on a business, that means normal business. Those does not cover under section 44 AD. So if their turnover exceeding 1 crore, they have to go for tax audit. If these businesses having turnover up to 10 crore, still they can escape the audit if their cash receipt is up to 5% and cash payment up to 5% of respective of receipt and the payments. So if those business having cash receipt up to 5% of receipt and cash payment up to 5% of total payment, then they need not to go for tax audit up to 10 CR. They will go for tax audit if turnover exceeding 10 CR. So that is the end of normal business. Fine. Now we will discuss section 44 AE first. Then we will go for 44 AD. So 44 AE, now we know it's a transport business. In the transport business, you have to go for audit in two situations. If you have more than 10 motor vehicles, so you will not follow section 44 AE. Then we have to see the turnover limit. If turnover exceeding the specified limit, you have to go for tax audit. But if you are applying or if you are covered under section 44 AE, then if you are going to declare your income less than the specified limit, that is 7,500 rupees per vehicle or 1,000 per ton of gross vehicle. If you want to declare your profit less than that, in that situation, you have to go for tax audit. So 44A business, tax audit concept has been clear in a one sentence. Normal business, those are not eligible under section 44AD. That has been cleared over here. That is 1 crore or 10 crore. Now, the eligible business section 44AD. For section 44AD, we have to go for tax audit if our turnover exceeding 3 crore. Always tax audit. If turnover is up to 3 crore, then there will be two situations. If it is up to 2 crore, if it is up to 2 crore and you are declaring your profit 6% or 8%, then no audit. But if turnover is up to 2 crore, but you declare your profit less than 8% or 6%, you have to go for tax audit. Even if suppose your turnover is only 1 crore under section 44AD, if your turnover is 1 crore and it's completely via cash mode, so you have to declare 8%, that is 8 lakh, but you say no, my profit is 7 lakh, then you have to go for tax audit. So if turnover is up to 2 crore, then if you are declaring your profit less than 8 or 6, you have to go for tax audit. If your turnover exceeding 2 crore but up to 3 crore and your cash receipt is up to 5% of turnover, then no tax audit if you're declaring profit 8% or 6%. If you're not declaring, you have to go for tax audit. Now it's so simple. All provision has been explained over here. Now last is profession cases. In case of normal profession, you have to go for tax audit if it is exceeding 50 lakh. If you are falling under notified profession, then if your turnover is up to 50 lakh, then if you declare profit up to 50%, no tax audit. Declaring less than 50%, tax audit. If your turnover exceeding 50 lakh up to 75 lakh, and your cash receipt is up to 5%, then no tax audit if you're declaring profit up to 50%. If not declaring, then you have to go for tax audit. Now these are the provision of section 44AB. And you might feel that now it is simple because we understood what is the concept of 44AD, 44ADA, 44AE. In this 5-year concept has also been explained that if you once apply section 44AD, then have to be declare profit as per section 44AD for 5 years. If you default in any year, then for that default year and for next 5 years, you cannot apply section 44AD. So after reading 44AD, now 44AB is too simple because this section 44AB, 75% part of section 44AB talks about section 44AD, ADA and A. So once you understand the provision of AD, ADA and A, then 44AB is so simple to understand. Okay. So I hope it's clear now, section 44AB, everyone. Let me take some query if there is anyone. Oh. So now we are going for a break, and when we will resume, kindly you should have a pen, paper and calculator. We are going to discuss MCQs and test your knowledge question today after the break. Mr. Akash, can we go for a break? Welcome back, everyone. So I believe that you must have taken your tea, coffee, etc. As I have taken my medicine to continue our class. So now we will discuss our test your knowledge questions. If there's any query, you can ask me. There are 10 test your knowledge question. I'll try to explain each and every question, discuss it with you. So the concept will be so question 1 is regarding depreciation and additional depreciation. Mr. Venus engaged in manufacture of pesticides, furnished the following particulars relating to its manufacturing unit at Chennai for the year ended 31st March 2024. WDV of plant and machinery on 31st March 23 has been given 30 lakh. Depreciation for that previous year is 4.75. So technically, if we'll find the opening WDV, that will be this minus this. So that is 25.25 lakh. Okay, this is my opening WDV. New machine purchased on 1st September 2023 for 10 lakh rupees. New machinery purchased for 1st December 23, that is for 8 lakh rupees. Computer purchased on 3rd January 2024 is for 4 lakh rupees. I hope till now there is no problem. Other information has been given, that is all assets were purchased by account pay check. So that has been given to consider the actual cost. All assets were put to use immediately. Because all asset has been put to use immediately, that means this is for more than 180 days. This is for less than 180 days. This is for less than 180 days. Clear? New machinery purchased on 1st December 23 and computer have been installed in office. So that has been installed in office. So we cannot claim additional depreciation on it. We can only claim the normal depreciation on this. Clear? Now this is very important point. Point number 4. It says during the year ended on 31st March 23. That means preceding previous year. A new machinery had been purchased on 31st October 22. That means for last previous year, it has been used for less than 180 days. For 10 lakh, additional depreciation beside normal depreciation has been claimed. So on that 10 lakh, additional dep will be 10%. Because rate is 20%, but it has been used for less than 180 days. So it is 10%. That means 1 lakh additional dep has been claimed in 22-23 and 1 lakh need to be claimed in 23 and 24. That means in our current financial year. Depreciation rate has been given for the block is 15%. The assessee has no brought forward loss, no unabsorbed depreciation. You have to calculate the depreciation and additional depreciation in two scenarios. Suppose he exercised the option of shifting out of the default tax regime, that means as per normal tax regime, and if he is paying tax as per section 115 BAC. What is the difference between in these two sections for the above question? That means for 115 BAC, additional debt cannot be claimed. That's it. Other all provision will be remain the same. So that was the question. Now let me solve it for you. So that was, we are solving it first under optional tax regime. First of all, opening WDV as on 142023, that is 25.25. Clear? Then asset purchase, that is more than 180 days for rupees 10 lakh. Here is normal depreciation, here is additional depreciation. The rate is 15%. So on opening WDV, the normal DAP rate will be 15. It is more than 180 days. Normal DAP will be 15%. Then less than 180 days, the value is 8 lakh. The DAP rate will be 7.5%. Then for computer, that is again less than 180 days. That is 4 lakh. So again, that will be 40% is the DAP rate for computers, and this will be now 20%. No additional DAP on this because in office, on office, opening WDV cannot have the additional depreciation benefit. In this case, we will have the additional depreciation benefit of 20%. So now we calculate the depreciation. The normal depreciation will be 3.79. Normal depreciation will be 1.50. The normal depreciation will be 60,000. The normal depreciation will be 80,000. That is 6.69. Clear? The additional depreciation will be 2 lakh. This is 2 lakh, and last year additional debt 1 lakh was remaining. That is last year additional debt also. So total additional debt will be 3 lakh. So my total depreciation is 9.69 lakh. That is my answer for optional tax regime. If we will go for normal tax regime, then we will have same provision, except that we cannot claim this additional depreciation benefit over here. Our normal depreciation will be only 6.69 lakh in case of section 115 BAC. Is it so simple? So here is the solution part. You can solve this question. This is the question number 1. The solution is later on has been given in the question. Now we are moving on to question number 2. Mr. Abhimanyu So question 2 says, Mr. Abhimanyu is engaged in the business of generation and distribution of electric power. You remember the provision regarding generation and distribution of electric power? He opts to claim depreciation on WDV method. He is not claiming as per SLM. So if he has been claimed the depreciation as per SLM method, then the terminal depreciation balancing charge concept will be applicable. But because he is claiming depreciation as in WDV, then there is no specific new provision. From the following details, compute the depreciation allowable as per the provision of Income Tax Act 1961 for assessment year 24-25, assuming he has exercised the option of shifting out of the default tax regime. So we need to calculate as per optional tax regime. So WDV has been given 50 lakh. Previous year depreciation has been given New machinery purchased, that is eligible for additional depreciation as well. Machinery imported from China, from Colombo on 12th April 23. Normal debt can be claimed, but we cannot claim the additional debt. Why? On point number 4, machinery imported from Colombo, and this machine had been used only in Colombo earlier, and the assessee is the first user in India. Still, why we cannot claim depreciation on this machine? Can anyone tell me why we cannot claim the additional depreciation on point number 4, machinery? What is the reason that we cannot claim the additional depreciation on this machine? Can anyone explain? I'm waiting for your answers. Point number 5 says new computer installed in generating wing unit on 15 July. That is eligible for additional debt because it is in factory unit has been installed. But why we cannot claim additional debt on point number 4? So answer has been received. Miss Sanjana Ben Chauhan is saying cause it is second hand. Well done, Sanjana Ben. High five from Wi-Fi. So not a new machinery, correct, Srinivasan. Second-hand machine, Rito Banerjee, very well done. Kalai Sale P, secondary purchase, very good. Vaishali Bindal, second-hand machine, well done. Yes, exactly, because it's a second-hand machine, so we cannot claim depreciation on that. So now we see what is the solution. Question number 2. So we have opening WDV. That was 50. Depreciation of last year. So opening WDV after depreciation will be 42,50,000. We have to see the normal depreciation, additional depreciation. Rate of machine has been given 15. So this will be applicable on that. One machine has been purchased, that is less than 180 days, 10 lakh rupees. That means 7.5% normal depreciation, 10% additional depreciation. One machine more than 180 lakh, that is from Colombo, imported. So we can claim normal depreciation only. There cannot be any additional debt. And one more machine, that is computer, 2 lakh. Normal depreciation 40%, additional depreciation can be claimed 20%. So this will be 6,37,500. This will be 75,000. 1,35,000. 80,000. This will 1 lakh and 40,000. Excuse me. So that is 9,27,500 normal debt. You can deduct it, normal debt and additional debt also. This is 1,40,000. So total depreciation is 10,67,500. This simple. Next, the examine with reason. The allowability of the following expenses incurred by the Mr. Manav, a wholesaler dealer of commodities under the Income Tax Act 1961 while computing profit and gain from business or profession. For the assessment year 44, 2024 and 25, if he has exercised the option of shifting out of the default tax regime, that means as per optional tax regime. So construction of a school building in compliance with CSR activities. So is CSR expenditure allowable as deduction or not? Send me your answer. Is CSR activities expenditure is allowable or not under income tax? We have discussed this provision. The CSR activities expenditure is allowed or not? Section 37 we have discussed regarding CSR activities expenditure. Waiting for your answers. Kindly send me the answer regarding the allowability of CSR activities. Srinivasan is asking, sir, can you explain why 10% on computer? I have taken, I guess, 20% on computer, not 10%. Okay. For 10%, yes, 10% on computer, Srinivasan, you are right, I guess. That is because, let me see the date of purchase of computer. Example number 2. It is 20%, not 10%. It's 20% of purchase value, Srinivasan, not 10%. That is 40,000. I guess you are asking this. So that was 20% on computers. So is CSR activities allowed? The answer is not allowed. In section 37, CSR activities are disallowed. Very good. Well done. Next is the purchase of building for the purpose of a specified business of setting up and operating a warehousing facility for sugar of food grains amounting to rupees 4,50,000. Somebody asking Harsh thing in question number 1, how we will calculate depreciation as per default tax regime. I have just explained in question number 1, there will be no additional depreciation. All other provisions to calculate normal depreciation will remain the same. You can see the answer also. So purchase of building for the purpose of a specified business, that is running and operating a warehousing facility for storage of food grains. So does storage of food grains is a specified business or not? The answer is yes. So 4,50,000 can be claimed under section 3580. Interest on loan paid to Mr. X, a resident, 50,000, on which tax has not been deducted. The sale for the previous year 22-23 was 202 lakh. Mr. X has not paid the tax, if any, on such interest. So will it be allowed or not? Because the payee is the resident. We are talking about the TDS provision. Because the payee is the resident. And we had paid interest to the resident payee. So the provision says 70% will be allowed and 30% will be disallowed. That means 35,000 will be allowed as expenditure and 15,000 will be disallowed. Commodities transaction tax paid, 20,000 on sale of bullion. So in section 36, the security transaction tax or commodity transaction tax paid if the business related to commodities. In the question, he was a dealer of commodities. So the expenditure on commodities transaction tax will be a business expenditure and you can claim the deduction of it. So 20,000 is also allowed. These are again for true and false. Kindly read the provision and you can see the solution also and the provisions also. If there's any query in any question, I will explain. I want to solve the numerical question, so that will help you to understand the provision of PGBP easily. So this question number 4, 5, these are only regarding the allowability and disallowability on the basis of provision. Even if you have any query in any point, you can ask me today or later, there is no issue. I want to solve this kind of question like question number 7. So that will, these kind of question going to be asked in the examination. That will help you to understand the provision and to how to solve the question in examination. Now, Mr. Shivam, a retail trader of Cochin gives the following trading and profit and loss account. So in the question, in the examination, this kind of question will be there. There will be a trading and profit and loss account, of course, and there will be some additional information also. After the question, it says, it was found that some stock were omitted to be included in both the opening and closing stock. So let me solve it one by one. This salary includes 10,000 paid to his brother, which is unreasonable to the extent of 2,000. I can solve majority part over here also, and then I will solve it for separately for a better understanding. So you can see out of this question, we will take the net profit, first of all, which has been given as per accounting is 50,000. And always start from the credit side. Sale will be the part of course, business activity. Stock is also, gross profit also, income from UTI, that is income from other source part, like dividend, etc. So that is going to be reduced 2,400. Clear? Then his opening stock is correct, purchase, GP, salary, rent, interest, depreciation. This is as per accounting. So I have to add back this depreciation completely. Printing, stationery, etc. Postage allowed, loss on sale of short-term, loss on sale of shares. So loss on shares or profit on share is the part of capital gain topic. So that cannot be claimed over here. That is going to be add back 8,100. Other expenses allowed. These are the things which we need to allowed or disallowed from the trading and P&L has been given. Now we are moving on to additional information. As per additional information, first point says it was found that opening stock were omitted to be included in both the opening and closing stock. There was some stock which has been omitted to return, which is opening stock. We did not write 9,000 and closing stock we have omitted 18,000. So if I will write or include 9,000 value in the opening stock, it will affect my profit by reducing it. So this 9,000 is going to be reduced and this 18,000 going to be increase my profit. Salary includes 10,000 paid to his brother, which is unreasonable. Under section 40A, we have discussed that if any payment to relative, etc., which is exceeding FMV, that is going to be disallowed. This 2,000 has to be disallowed. Sorry. The whole amount of printing and stationery was paid in cash, which is exceeding 10,000, that is 23,200. Full value is going to be add back. The depreciation of 1,05,000, which has been given in the trading and P&L, has been based on this information. So we have to find the depreciation as per income tax with the help of these information. That is, opening WDV is 420. A new machine has been bought for 70,000. Old has been sold for 50,000. So machine 1's July, that is more than 180. So we have remaining with the value that is 4,40,000. 15% of it will be my depreciation. That is 66,000. Rent and rates includes GST liability of 3,400 paid on 7th April 2024. Because GST is indirect tax and section 43B says any tax sorry any tax, duty, cess or fees by whatever name called under any law will be allowed as deduction if it has been paid up to due date of ROI. So because the due date of ROI in this case is either July or October, the payment has been made before that. So this deduction will remain allowed. We will not do anything. Other expenses says we have paid 2,000 as a donation. Donations cannot be allowed as under section 37 provision, which says expenditure should not be of personal nature, should not be of capital nature, should be for business exclusively. So this is not for business. So that cannot be allowed. This is going to be add back. So you have to, the question says now, you have to calculate the profit and gain of Mr. Shivam under presumptive taxation and as per regular. So for presumptive taxation, we just need to apply 6% or 8%. Accounting exercise the option of shifting out. The normal provision has to be solved, assuming that he is shifting out. That means as per optional scheme, the whole amount of turnover received by the account pay check. So that means for 44AD, we will take only 6% of turnover as net profit. And we have to solve it as shifting opt out. So let's see the solution of this. So that was net profit as given in question, 50,000. Then UTI, dividend, reduced. And depreciation as per accounting need to be add back. Loss on shares need to add back. Opening stock increment will reduce my value and closing stock increment will increase my value. Salary paid exceeding FMV to relative, 2,000 need to add back. Printing expenditure in cash on a single day exceeding 10,000, so full value need to be add back. Then depreciation, I have explained you how to calculate. That will 66,000 need to reduced. Donation going to add back. So that will be net profit as per normal provision of PGBP. Now for 44AD, we have to apply 6% on turnover. Whatever will be the value, whichever is lower, that will be more beneficial to the assessee to declare his income under profit. Okay. So next, moving on to next question. Question number 8. This is a very good question regarding section 44AE. It says Mr. Sukhvinder is engaged in the business of plying goods carriages on 1st April 2023. He owns 10 trucks, out of which, read very carefully, he owns 10 trucks, out of which 6 are, that is question number, I guess, 8. Okay, he owns 10 trucks, out of which 6 are heavy goods vehicle. The gross vehicle weight of such goods vehicle is 15,000 kg each. Okay, so for these 6 vehicles, 1,000 rupees for each ton capacity. That means 1,000 into 15 into 6. The second sentence is very, very important. On 2nd May 2023, he sold one of the heavy goods vehicle. Now see, this information is so relevant. On 2nd May, he sold one of the heavy goods vehicle and purchased a light goods vehicle on 6th May 2023. The new vehicle could, however, be put to use only on 15 June. So put to use is irrelevant. Now, very interesting situation is over here. He owns 10 trucks. So if we will see that in the month of April, if I'll identify that in the month of April, how many vehicles he owned? 10 vehicles, out of which 6 are heavy vehicle and 4 are medium or light motor vehicle. So for the month of April, if we find out the taxable income, that will be 7,500 only for 1 month. Clear? That will be 7,500 and 6 motor vehicle, because we have 15,000 weight capacity. So that means 6 into 1,000 into 15. So that will be my April month income only. April. Now the May is very important in this case. The provision says that 7,000 per month or part of the month is taxable owned by us. Clear? And the same is 1000 per month or part of the month for each ton capacity in case of heavy goods vehicle. So due to this word of part of the month, now see the situation in the month of May. You might get confused if you will see the solution if I'm not going to explain that. So that's why I'm explaining this. May month is very important. If you see in the month of May, he was having 6 heavy vehicles. On 2nd May, he sold one of it. But for the part of the month, that means for a single day, he has occupied that motor vehicle which he sold. So for the full month, it's going to be taxable. So because he sold it on 2nd May, so we will consider full 6 vehicle has been owned by him for the month of for the purpose of calculation of income. So understood? On 2nd May, he sold, but we will consider full 6 heavy vehicle taxable value in the month of May. Why? Because the concept says part of the month. Even for a single day, you owned any vehicle, then we will taxable the value for the full month. So for this, it will remain the same for the month of May. Now the problem will arise. He acquired a new motor vehicle of light motor vehicle on 6th of May. So he sold on 2nd of May, but we have to consider full 6 vehicles for the purpose of May. But now you see he purchased a new motor vehicle that is on 6th of May. He was having 4 motor vehicle in April. He purchased a new on 6th of May. So for the purpose of May, now he is having 5 light motor vehicle. 5 because 4 he has already. 1 he purchased new on 6th of May. Again for the part of the month. From 6th of May, he has a new motor vehicle from 6th of May till 13th June. So we will consider the full month value for that also. So technically he is having already 4 and this new one will also be considered for the purpose of taxability. So this will be now 7,500. So if you will see, you will find out over here 11 motor vehicle in the month of May, but practically it was not happened. On 2nd of May, he sold one. So he is having 9. On 6th May, he purchased one. So he's having, practically he's having only 10. But when we go for valuation taxability income, then you will see we have to consider 6 motor vehicle in May also for heavy. And for light motor vehicle, we have to consider 5. So together it will be 11. And if you have 11 motor vehicle, the section 44A does not applicable. But this is only for the purpose of calculation. Practically, he does not own 11 motor vehicle at any point of time. He sold on 2nd of May. He purchased 6th of May. If he purchased new vehicle on 1st of May, then it will be considered 11 and section 44A will not applicable. But in this case, section 44A will remain applicable. This is for the month of May, and then from month of June till March 24, it will remain same. It will be 5 into 1000 into 10 months into 15, and this is remain 5 into 7,500 into 10. So that total will come 44A total will come 13,72,500. Other business income has been given in question 70,000. That is 14,42,500. This will be if he applies section 44AE provision. The question says if he does not apply section 44AE provision, then his income is as per normal provision is just 4,45,000 plus 70,000 other business income. So that will be remaining 5,15,000, which is beneficial. In this case, this is beneficial to the assessee. Solution, you can check it out. In solution, the value as per 44A will be different, and as per normal, it's very lower value, that is 5,15,000. So he will opt for this. Now, question number 9, we are going to solve. Raju, a manufacturer at Chennai, Srinivasan asking, sir, why additional debt for computer at 50% or 40%? Additional debt is only for new plant and machinery. Computer is also a plant and machinery. And because it has been used, computer is a plant and machinery having a depreciation rate of 40%. Understood? Like car is also a plant and machinery having a debt rate of 15%. Computer is also a plant and machinery having a debt rate of 40%. And if that computer is used in factory premises, additional debt can be claimed. The depreciation rate, additional depreciation rate is similar for all, that is 20%. So we claim 20% on the computer value as an additional debt. So computer or any machine, we know the meaning of machine, air, water, pollution control equipments, even books are machine, but we cannot use it in a factory because that is only plant and machinery for the purpose of professionals. So computer is also a plant and machinery having a different rate of depreciation. So if it has been used in the office premises, we can claim the additional depreciation. Okay, Mr. Raju, a manufacturer at Chennai gives you the following information. We have to solve the question. Sale, stock. You can see dividend will not form part of my business income. Income from agricultural, that will not going to be form part of my business income. I have to deduct from the debit side. Opening stock, purchase of raw material, manufacturing, all are allowed. Administrative expenses allowed. Penalty SGST does not allow. So it will going to be add back. GST allowed. General expenses allowed. Interest on bank allowed. Depreciation as per accounting need to be add back. And we have now separate additional information like exceed FMV payment to his brother exceeding 10,000 need to be add back. Cash payment to transporter. Cash payment to transporter 33,000 has been given in the question. And up to 35,000 is allowed for transporter case. So it is allowed. A sum of 4,000 per month paid to the staff has not been recorded in the books. So this value is going to be add back because this is the expenditure which is unexplained expenditure. You have not recorded it. This will increase your income. It's a kind of unexplained expenditure. Bank term loan interest actually paid on 31st March 24 was 20,000. Balance paid in November. So only 20,000 can be allowed. Balance is going to be disallowed. Housing loan information has been given for the purpose of income from house property. But because in this question, the question says solve the question assuming he is under default tax regime. Point number 5 says house is for self-occupied purpose. For self-occupied purpose, interest cannot be claimed. So in the solution, we will not allow 23,000 because it is under default tax regime. For depreciation, information has been given in the question. Compute assuming he pays tax under default tax regime. On the basis of this, I am going to solve this question for you. Net profit is 5 lakh. Disallowed income, dividend 15,000. Agricultural income 1,80,000. Then SGST penalty cannot be allowed in any case. Add back. Depreciation as per accounting need to add back. Commission exceeding FMV paid to the brother 10,000. Depreciation sorry, first of all, black money salary paid considered as unexplained money. So that is not going to be allowed. It's going to increase my income and going to be taxed at separate rate. Bank interest, out of that 60,000, only paid 20,000. Bank interest fall under section 43B, which says if it is paid up to due date of ROI, that might be July or October, then it only allowed, otherwise disallowed. So it has been paid in November, so remaining interest will be disallowed. Then we have depreciation. If you will calculate the depreciation, that will come so net profit will be 3,84,500. Income from house property will remain nil. Interest cannot allowed because we are under default tax regime. Dividend income, 15,000 going to be taxable more. So business income plus dividend income going to be my gross total income. Agriculture income will remain exempted. No deduction will be allowed. This is my total income also. Question number 10 is regarding the agricultural business. You can see the solution, and if there is any issue, I will solve it for you. So now we are moving on to our MCQ for today. Okay, 3 MCQs with question. We are having our MCQ. Kindly read the question and send me the answer. My throat is not well, so I won't be able to read it for you. Kindly read it and send me the answer. This is question number 1. So for question number 1, send me your answer. Mr. Gandhi is asking, WDV of computer will be 0 after 3 years of depreciation. Will we take down the computer from the block even though computer is still in use? How WDV will become 0? We are using WDV method. So whenever you deduct the depreciation as per reducing balance method, it cannot be 0 in 3 years. Not possible. How you are saying computer value becomes 0? Additional DAP will be allowed only once in a lifetime. After that will be normal depreciation as per WDV method. So how computer value becomes 0, Mr. Gandhi? I guess there is some confusion in your question. The correct answer of question number 1 is A. Well done. Now the question number 2. So question number 2, kindly send the correct answer. The correct answer is, of course, C. Deduction will be available for 5 lakh. Question number 3. It's a very simple question. Especially WDV means written down value, not method. Method is straight line. If the straight line method, that will be given in the question. If the rate of depreciation has been given, that means it's a WDV method. Otherwise, the life of the asset will be given. So you can understand that it's a straight line method or not. So if the rate has been given, it is means we are applying reducing balance method always. If the question applies SLM method, then it will be given in question. Under income tax, there is no concept of SLM method except in case of power generating undertaking. Okay. Correct. Question number 3. Correct answer is D. Well done. Question number 4. Correct answer is option B. Question number 5. Payment to resident in India on which tax has not been deducted shall be disallowed. So question number 5. Correct answer is B. Question number 6. Correct answer is C. Question number 7. Correct answer is again C. Question number 8. It's very simple. Correct answer is A. FMV exceeding. Question number 9. The correct answer is A. I want you to solve question number 10. That's I was waiting for. Now kindly solve question number 10. It's a numerical question and then send me the answer. Question number 10 is very important. We have to find the book profit. Then after book profit, we have to find the remuneration allowable, maximum remuneration as per income tax. Then as per income tax, maximum remuneration and the remuneration as per account. Lower will be allowed as allowable remuneration out of your book profit. Then you will able to find the net profit. So kindly solve this question. This is the last MCQ. You have to solve it. Let's see who is going to give the right answer. I believe you all are working on this question. The specially bindles says option B. Okay. Anyone else? Okay. Chetan is saying C. Okay. So net profit before interest and salary has been given 6,20,000. So first of all, as a long cut method, I have told you, I have to deduct the salary as per accounting 180 and full interest 150. So that will be net profit after interest and salary. It will come 2,90,000. Now for the purpose of book profit, I have to add all salary 180 and interest that is disallowed, that is exceeding 12%. That means 3% interest I need to add back. That will come 3,000, 30,000. So that will be my book profit, and that is 5 lakh rupees. So this is a long cut method, but you can apply this method always. If the net profit has been given before interest and salary, then you can deduct the interest and salary full value, then add back. If net profit has been given after deducting interest and salary, then we will start from over here. That means we need this value. Net profit after interest and salary as per accounting. Okay. So now on the basis of this 5 lakh of book profit, we have to find the maximum salary as per income tax. Up to 5 lakh, that will be up to 3 lakh, sorry, 1.5 lakh or 90% of 3 lakh, which will be 270. So higher will be 270. Balance 2 lakh is 60% liable. That is 1,20,000. So that means 3,90,000 is my maximum salary as per income tax. And as per account, it is 1,80,000. So whichever is lower is going to be deducted from book profit. And that will be my answer. That means 3,20,000. Option number B. So those who have answered B has done well, very good. Those who have not given answer B have to work hard. Okay. So that was PGBP for today. Then we have completed all the almost test your knowledge question, all the provision, MCQs, and I will upload the chart also regarding the section 44AA. As I've told you in starting that do not underestimate the theoretical provision also. So section 44AA, 44AB, very, very important. Even section 44AD, ADA and AE Also theoretically also important for the examination purpose. They can ask you regarding the audit when we require to conduct, what are the procedure to find out the profit in section 44 AD, AE or ADA. The limit of AE like 1,000 per month per vehicle exceeding 12,000 tonnage capacity, etc. You have to learn as well as theoretical provision as well as for numerical point of view both. So we will our next class will be on day after tomorrow, that is regarding capital gain. I hope the thought will be better on that day. So please remember one thing, revise twice. That's my advice to make you wise. Please, please, please study hard. Take your study very sincerely. Revise the provision, numerical, try the RTP, try the question of study material, illustration, test your knowledge, previous year examination, and please go for mock test also. Remember this, revise twice, able to revise the provision twice with numerical. That will be really, really easy for you to qualify this examination or this group, whatever you are preparing for. So please take care and have a good day. We will see each other day after tomorrow. So Akash ji, can we close the session now?